Hi, welcome to Bond Bytes, a daily bond market highlights from INR bonds. And in today's market, we cover what are the factors that you need to consider for two public debt issues. Of one is of Edelweiss Housing Finance, and the other is of GRO Capital. But before that, on the market itself, 10-year gsec yields rise sharply to 7.15%, the highest seen in few years, highest seen uh, but from since the time COVID started, a couple of years back. And US Treasury yields also climbed to 2.76% on worries of inflation. So the whole world is talking about inflation at this point of time. Even RBI has raised its forecast for inflation. And with inflation at very high levels, investors in fixed income are really suffering from low interest rates on their investments in fixed income, where they're earning much less than inflation, and this is really hurting their savings. And at INR bonds, our focus is on inflation and how it really affects your savings, as every year that investors underperform inflation, then the next year they need to earn more. And INR bonds will be covering the best inflation and how best to save during inflation with the best fixed income products. Now, a couple of bonds that are on the public debt issue. So public debt issue is a primary issue of bonds, and these are available for retail investors. They can invest through UPI mandates, and they can invest as low as rupees 10,000 in these issues. In that way, it is very retail friendly. And also the yields, that is the rate of interest available on these bonds, are higher than what is available in other instruments like fixed deposits and maybe many mutual fund products and other products as well. Edelweiss Housing Finance has launched its issue, and for 2 years maturity, it offers around 8.5% and going up to 9.5% for 10 years. And GRO Capital is offering 10.37% for 18 months and goes up to 10.9% for 3 years. Now, these interest rates are much higher, but there is always a reason why these interest rates are high, and largely because of the fact that they have some their risk is perceived at higher in the market. That's why they are offering higher interest rates. So what are the factors investors need to consider for investing in these debt issues? And the best way to actually take informed decisions on this investment, public debt investments, is to download Quick Invest by INR and then reach out to our customer support, who will answer all your questions on the how to invest and what are the factors really you need to understand and what is the best way to invest in these debt issues, given that how much of risk you want to take. The first thing that you need to consider is why is the interest rate higher for these issues. So if interest rate is higher, that means that the market is perceiving and that the risk of these issuers, that is the credit risk, is higher than the higher safety issues. So just to give you an example, 2-year Bajaj Finance or HDFC would be issuing bonds at below 6% or around that, while Edelweiss is issuing at 8.5%, and GRO is issuing just below 2 years at 10.37%. So clearly there is a reason why the risk is higher. But is the risk worth it? Is a return worth it for the risk that is offered by these companies? The second factor that you need to consider is what could be the potential issues that could come up with these investments as we go along in 2 years' time. What could be, can the companies really do well in this scenario where interest rates are rising? Liquidity, global central banks are now removing accommodation. And when they do that, so what happens to the economy? and also what happens to the credit of these companies. These are some of the factors that you need to consider clearly while investing in the company. The third is the promoter background. So if there is any stress on the liquidity, can they get access to funds from the promote with the strength of the promoters, or can they get access to funds with through other sources like private equity, etc. The fourth is that how can they manage the business? What is the track record? If they don't have a track record, what are the processes they follow? And what is the basic financial ratios? How strong they can how strong they can keep the balance sheet to high capital adequacy, etc. So that if required, they can always raise more capital to provide for need for funds when there is stress in the market. So these are all some of the risk factors. There are more risk factors like liquidity, that is, can you sell bonds? How frequently do these bonds trade in the market? Do mutual funds and big institutions invest in these companies or invest in the full group? Because it's very important that institutional liquidity, many of them, or the promoters itself, do they have access to institutional liquidity? So all these questions need to be answered. The best person to answer all these questions is your financial advisor, and reach out to your financial advisor before you want to invest in these issues. Or you can always call up financial advisors too. Actually, can use INR bonds to understand and how to communicate to their investors on these public debt issues. And all you need to do is, if you're a financial advisor, all you need to do is download our Quick Invest app and call us on the customer support. And then we can take you through how to communicate to your clients. And if you're a direct investor too, then what you need to do is again download Quick Invest app. It's available on iOS and Android, and reach out to our customer service and analysts who can guide you through the whole process. The even more important is that once you download, you'll understand how we provide the information on bonds. What are the bonds available that can beat inflation? What are the other bonds that you can look at to invest in against these public debt issues in terms of how do you compare two bonds, etc. So many other factors we can offer. And obviously we also offer you a straight through investment process where you can invest in these public debt issues as well as invest in other bonds. Very seamless investment process with the most transparency, the best information available, and our own proprietary risk score, which we use with various inputs from the market and other sources. Thank you very much for listening in. Do not forget to download Quick Invest by INR Bonds to know more about public debt issues, and also check out what bonds are listed to beat inflation. And do subscribe to our YouTube channel if you have not done so already.